Today is Wednesday, the 19th of August, and coming into the market open today after yesterday. A close below the 10-day for all indices yesterday. So this is suggesting or shows that sellers are starting to gain a footing over bears, and prices are starting to favor the downside for now. Market structures still remain intact, but ultimately there has been a slight uptick in volume on this down move, especially for the Qs. Clearly, more volume coming in yesterday compared to the recent two kind of trading weeks. So that is a potential cause for concern. But ultimately, it's been fairly contained. It hasn't been anything too drastic. A 1.69% move for the Qs yesterday, which is a decent move, but it's nothing too crazy. Kind of anything above 3% is where I'll start to feel a little bit more concerned. But for the most part, it's contained. The one thing that I would say, especially about the IWM and the S&P, is that they both closed near their daily lows or at their daily lows. So the fact that they lost their 10-day moving averages and then also closed at their lows isn't the best sign for some sort of relief coming into the market today. The Dow had a relatively flat day, and it is the laggard of the group, and I guess been in the longest kind of correction or pullback out of all the indices. It is currently coming into its 20-day moving average, so there are reasons for the market to find some sort of relief here, but ultimately it's just based on the fact that there's been selling and not any actual reasons to get bullish other than just some sort of relief. The Kospi also had a fairly sized pullback yesterday, nearly 6%, coming into this convergence and moving averages here. So it's currently trading at a key level. I'd like to see this area hold, and if it does break down further, that wouldn't be a good sign at all. The Mag 7 also at a kind of support level on this 20-day moving average, but ultimately has been rolling over since the beginning of August and really isn't showing any signs of strength. And these are the stocks really that I'd expect to show strength beneath the surface to really show me that the market wants to take risk, or not even take risk, but just to show that capital is flowing into the equity market. So the VIX did have a slight uptick yesterday, nothing major, still towards its range lows around this 15 mark, but an uptick nonetheless. The dollar index still remaining below 100, treating 100 as this kind of resistance level. And now the decline in 10-day is also acting as slight resistance as well, but kind of merging between these high time frame moving averages. Still yet to properly test them, but no signs of either relief or further deterioration there. The semiconductor ETF is kind of mirroring what we're seeing in equities as it usually does, but the 50-day clearly holding as a resistance level there. So it is kind of looking like it's paving the way for more downside action, but ultimately the 20 days acting as support for right now. Software is also, which has been leading the market as well, which is also a key turning point, and makes sense that it's kind of reverted at this area. So if this recent rally is real strength, then I'd expect to see this 20-day potentially this 20-day act as support when it catches up to price. But ultimately, if it does lose that, then that wouldn't be the best look. The main thing that I'm paying attention to in regards to ETFs is the energy sector. I stopped watching it as closely throughout the last week, but I remember looking at it back here, thinking that this was kind of looking like a short term, not a super long, a big cup and handle, but a short kind of month-long cup and handle formation. And it was looking like it could potentially break out to the upside, and it actually has done that. So the fact that this has happened, all whilst oil is looking poised and above all key moving averages, isn't the best look in terms of the market looking to go risk on in any way. The fact that no updates have been made in regards to Iran US, or actually the one update is that Trump announced that there are no talks ongoing. So based on that, there's no real sign for the market, the general market, to feel super confident in, I guess, in the near term, and that is kind of showing up in yields. Although on shorter duration yields, they still look like they're rolling over slightly, but it's nothing major as of right now. But more importantly, the 10-year and the 30-year, they pushed to new highs yesterday, and really this trend, this uptrend, is looking fairly strong. And ultimately, the higher that rates go, the less inclined I'd feel to take on risk, based on the fact that higher rates are never really supportive of a risk-on environment, or supportive of equity prices appreciating to the upside. So this is definitely something that I'm going to continue to watch. There are the highs not seen since when, back in 2007. So 17 years. It's it's definitely something to pay attention to. I mean, the market hasn't really been reacting to it too much, but this looks like it could break out further to the upside. And if it did break out further, say if it did start to close in on 6%, I think the market would have to respond in some way. In regards to breadth indicators, the number of stocks above 20-day moving averages is pulling back towards the midpoint, so nothing really of a concern there, but a pullback nonetheless. More of a slight cause for concern would be the number of stocks making new monthly highs and 52-week highs. They did have a fairly decent correction or pullback yesterday, not major, but a pullback nonetheless, and are now currently towards their range lows, or coming into their range lows. So I guess one thing that I would take this, or could take this as, in terms of it being a bullish thing, is that the lower it goes, the more it kind of means that it has to revert back towards the upside, which would mean that strength comes back into the market. But as of right now, I wouldn't expect that to happen, and I could definitely see these indicators deteriorating a little bit more, and that's also supported by the fact that the number of stocks making 52-week lows has also started to push a little bit higher. Nothing major, but is clearly holding above the 100 level now, which it was struggling to for the last 2 weeks. And then just looking at Stockbee's primary breadth indicators, is what I spoke about yesterday. I was expecting to see, I came into yesterday being cautiously bearish, based on the fact that we had 10 consecutive days of buyers being in control, and ultimately that had to end at some point. And the subtle signs that I see in price action in the market, it was making me feel that it was just around the corner, and it was. And again, yesterday, that just supported the fact that sellers are starting to make a bit of a stand now. And for the most part, it is controlled. It's not major selling, but the fact that it's selling coming in is not a sign. The fact that it's now confirmed that selling has been coming in, it's not a sign for me to suddenly get bullish or anything. So Bitcoin as well is nothing really going on in Bitcoin or crypto land. Still consolidating, but there is a White House crypto summit today, so potentially that could act as a catalyst for Bitcoin to break out of its range that it's been in throughout the best part of July, or even before that in June and July. So I am keeping my eyes on this, but ultimately Bitcoin's not really trading as a hedge. If it was trading as a hedge, it would have kind of rallied with gold recently on its recent move, and it didn't. So it's still a risk asset, in my opinion, and I guess the market's confirming that as well. So until there's some sort of clear catalyst for Bitcoin and crypto to move, I wouldn't expect anything, or I'm not expecting anything, until it at least reclaims its higher time frame moving averages, the 150 and 200 day. So the other key thing, I guess, to pay attention to today would be the FOMC meeting minutes, although I don't expect too much to come from this based on recent CPI and PPI figures, NFP figures, all coming in line with the Fed's views and goals in terms of controlling inflation. But at the same time, the fact that oil remains at this kind of inflection point and is above all key moving averages, whilst there's this uncertainty, I feel like that might come into their thought process a little bit, but ultimately I don't think it will. That's kind of clutching at straws there. So I don't expect anything to come from meter minutes today, but I am aware of it just in case there are any comments that take the market by surprise. So based on everything that I'm seeing, I'm going to stick with my view of being cautiously bearish. I could see this being a day where the market finds some sort of relief, but ultimately I'm more cautiously bearish leaning still until there's something for me to some sort of tangible thing to allow me to get bullish again in some way.